So in my last YouTube video, I covered why I made the switch from options to futures trading, but I had a lot of you in the comments asking to please go further in depth or at least do a beginner guide to what futures are. So that is what this video is going to be about. If you are brand new to futures trading, maybe you are looking to make the switch or you're just curious how they work, this 3-step easy guide is going to explain, number one, what are futures. So we'll cover the 101 basics, and then we'll move into number two, which is what brokers you can use to trade futures. And then the most popular question on the last one, number three, which is how to day trade futures with a small account, and basically how much money do you need to trade them, because some of them look like they have very high margin requirements. So I'll cover how you can actually day trade futures with a small account and get a little creative there, so no, you're not needing the full like 10,000 plus to day trade them. Before we dive in, I do want to warn you guys, as always, that I will never direct message you on any social media platform, and all the commenters down below are scammers. Please block and report them. I will never direct message you. I do not trade crypto. Instagram, I only have one account. It's always linked in the description box down below. So if you want to connect with me and see more of my traveling and just personal life, you can check that out. So first off, let's go over what are futures. So futures are a derivative financial contracts that obligate parties to buy or sell an asset at a predetermined future date and price. This is just the basic Investopedia definition. However, if you're used to trading options and maybe you're looking into futures, you guys should know with the options definition, it gives you the right but not the obligation. The futures contract does say it obligates the parties to buy or sell an asset, but I do want to make something very clear. We do not want to hold these contracts into expiration, because there are contracts and expiration dates on them like options, but it's much less complicated when it comes to picking that, and we will talk about the difference in expirations in just a minute. But just the basics here is know that if you are holding that contract into expiration, then you will be obligated to buy or sell that asset. So that means if you're trading oil, for example, and you hold that contract into the expiration date, you will be obligated to have some oil barrels show up at your house unless you can get around that. So just make sure you understand fully that we are just trading the contracts, buying and selling them, flipping them very quickly, or at least flipping them before their expiration date. So the whole point of day trading is not to hold up into expiration, so you're not obligated to buy anything, but most of the time you are going to have a notification which will allow you to roll over your contracts to start trading the next contract with the most volume, and that will prevent you from trading up into, that expiration date. So I'll show you those rollover dates in just a minute. But to summarize, just know you will not be obligated to have barrels of oil or corn or anything like that show up at your house, as long as you're making sure you are rolling over your contract dates and not holding into expiration. So these are some commonly traded futures contracts that I personally use. So -ES is just the futures version of SPY. So if you have day traded SPY, which I'm pretty confident that most day traders have at least looked at SPY, if not, I strongly suggest you do so. It tracks overall market conditions, but /ES is a really easy transition from if you have been trading options on SPY to then start trading futures using the ES contract. There are micros, so they're cheaper versions, smaller versions of ES. That would be -MES. You've got NQ, CL, which is oil. That is my baby. I trade that one all the time. And then RTY. These are just common ones that I personally trade. But when you're looking them up, so if you're going in Thinkorswim and trying to chart these out, you need to make sure you're using the dash. So for example, you can see up here, well, hopefully you can, but when you type in oil, you want to do -CL, and then now we have the oil contract, versus if you wanted to see ES, you just do -ES, and this will bring up ES future contract. So I personally just love to chart on Thinkorswim. This has been my day one platform for charting, but we will cover on step number 2 brokers that I personally have used or know people who have used them in regards to futures trading. I do not trade futures on Thinkorswim, and I'll go over a few reasons why that is. Before we move on, I just want to make sure everyone understands the basics of futures, and remember, futures are just another instrument you can trade on the stock market. I always encourage people not to get too wrapped up in the technical definitions. A lot of times, words like this can trip people up, but just understand it's a different instrument you can trade. So for example, if you have been trading stocks, just normal stocks, buying and selling them, futures is actually very close to just buying and selling normal stocks, but there is a lot of leverage involved, which we will cover. Options trading. Options trading is more complex, but that allows you to trade options contracts on, typical stocks, maybe SPY. But if you watched my last video, you know that I transitioned from trading options into futures because futures is the closest thing to trading the actual stock while still allowing you to have that leverage, meaning you can make more money, but you can always lose more money too. There's two sides to that story. So we're going to cover some ways that you can manage your risk when it comes to the leverage involved in futures. But next, since you guys have the basics, let's talk about future rollover dates. So future contracts do have expiration dates. They expire not as frequently as something like option contracts on SPY, which you can see expiring every single day. And you also don't have to deal with any Greeks or variables like theta, which are involved in options trading, which is a huge reason why I made the switch to futures trading. You don't have to deal with any Greeks. So if you are unfamiliar with options trading and that's all foreign to you, that's completely okay. But for the people who are maybe trying to transition from options to futures and understand how they work, there are no Greeks involved, which is just a massive, big plus in my book when it comes to trading futures versus options. So no theta, no Greeks. But there is expiration date. These are the different dates that you're going to see your contracts roll over to eventually. But there is a little trick here that makes it very, very easy for you to understand which contract you should be trading. And the trick is, I'm pretty sure all brokers do this, but I at least know the two brokers we're about to cover will notify you when the next contract expiration date has more volume than the current one you are trading. So it makes it super easy. If you are confused on which contract date you should be trading, when you sign up for that broker, that futures trading broker, they will notify you when the current contract you're trading has less volume, and that means you need to roll over to the next contract. So for example, if we are, currently we are in July, so if we get a little bit too close to the September contracts, this will probably happen about 30 days out, or typically in that time frame is what I have personally seen. But when we get too close to that contract, then the volume is going to switch over to December. And when that happens, your broker will notify you and say, hey, there is more volume on December. Do you want to roll over to that contract? And that's all you have to do. So basically it takes the picking the expiration date out of the equation, and your broker will help you with that, or should. The two that I'm going to go over, I know both of them do notify you. So this is a huge plus though, is you don't have to even make that decision. So with options trading, you're making a ton of decisions when it comes to what expiration date and strike price you're picking. But with futures, your broker should just tell you, hey, this one has the most volume, trade this contract. And remember, do not hold those contracts up in expiration date unless you want actual, physical items at your front door. Do not do that. So the next thing we're going to talk about in regards to the futures basics is what time can you trade them. So if you are familiar with typical stock market trading hours, that's typically 9:30 a.m. Eastern to 4 p.m. Eastern. The cool thing about futures is they trade pretty much 24 hours, 6 days a week. I did make a typo on my last YouTube video where I was saying 24/7. I meant 24/7 while the stock market's open. But I will definitely fix this error right here by just stating that it is 24/6. So you can trade them 24 hours, 6 days a week. And there is a little gap, usually between 5 p.m. to 6 p.m. And you can see right here, it's 6 p.m. to 5 p.m., but I'll explain this a little bit better just in a minute. But you can trade them pre-market, you can trade them after hours. There's a lot more flexibility when it comes to the amount of time you can trade futures. So if you're somebody who works full-time and maybe you want to take advantage of trading in pre-market, then futures definitely allows you to do that. Or if you're a night owl and you want to trade at nighttime, you can also do that. I will show you guys an example in just a minute on common time frames that I personally trade them and what I have seen more volume come in when it comes to trading hours. And there are going to be some downtimes where there's really low volume, so you want to be careful trading that time period. Just because the market's open doesn't mean it's the best time to trade. Also, while we're looking at this chart, you guys might be seeing the word tick size, and that can be a little confusing. Tick size is basically how they explain movement in futures trading, because tick just basically means the smallest amount of movement that could happen in a futures contract. So they move in ticks, and then those ticks will equal points. That can get a little confusing at first, but the best way to understand it is we'll just break down this simple math real quick. Okay, so let's say that you have a 30-point move on ES, which remember that is the futures version of SPY. It has a $50 point value, okay, which is $12.50 per contract, and it moves in 0.25 points or ticks. So a 30-point move equals $50, because remember, 1 point, $50 times 30. We're talking about 30 points. That will equal a $1,500 gain on the ES contract. So guys, these things move very fast. You can lose money very fast, or you can make money very fast. They're very, very leveraged instruments. So you do not need to be trading a ton of contracts. Honestly, one contract or going down to micros, which micros, we can go look at that example. This is an example of micro on the ES. So micro is just a smaller version. It's a fraction of the ES contract. So if you're used to trading, let's say, very small amounts of money, only a couple $100s on something like options maybe, and you're used to being able to trade with that small capital, then micros might be a better instrument for you to start out trading. Honestly, I feel like everyone should start out with micros so you can get a feel for how they move before you're jumping into the big boys, which is the regular contracts. So dash MES is the micro version of ES futures, which is right here. So if you just want to trade ES, it's dash ES, and that could equal, let's say, a 30-point move equals $1,500, or if you're losing 30 points, that's negative $1,500. So if you're like, wow, that's honestly more than my $1,000 account, then that's where micros can come in, because a 30-point move on a micro contract is only $5 multiplier, not 50. So 5 times 30 is 150 gain or 150 loss when it comes to trading micros. Okay, I know we have been over a ton of information so far. I really wanted to make sure I crammed as much of the basics when it comes to futures as possible. I didn't want to have to make a part 2 or part 3 on this. I hate when people do that. I just wanted to get to the must-know, need-to-know concepts when it comes to futures basics. So let's also go over a few other key points here. So there is no PDT rule when it comes to futures trading. How cool is that? So options trading. I'm sorry I keep going back and forth from options to futures. I just see a lot of people make that transition. That was my personal transition. So if somebody's watching this and they're currently trading options, they will definitely see the pros and cons. If you are coming straight from stock trading and not options trading, I apologize for all the extra terminology, but I really think it's very helpful to know and understand. So with options trading, you can do a cash account and get around that PDT rule. That is what I have taught for years. That's what I personally did when I had a small account. But you still have to wait 24 hours to get that settlement on that $1,000 cash account. That is what most people start with. So it's doable, but it's definitely not ideal. Futures, it's immediate cash settlement when it comes to your trades. So you're not having to wait that 24-hour period that you would with a cash account. If you're stock trading, you definitely need $25,000 or over to get around that PDT rule, but futures, that does not apply. So you definitely have a lot more flexibility day trading with a small account. You just have to make sure you have enough in your account to cover margin requirements, which, like I said, at the end, we will cover how much money do you actually need. So it is small account friendly. There are a few different ways to go about it, but let's just put it this way. You can absolutely trade futures with $1,000 or possibly under if you want to get super creative, but it's definitely still small account friendly. There's less variables to trade, so we went over, this is more comparing it to options. So you don't have all the Greeks, the theta, the strike price, the expiration. Remember, they'll basically tell you which one to trade. You can trade them 24/6, so I did fix that from my last video. Just know that they trade, and we can actually pull up this little article from NinjaTrader, which we're about to cover. That's one of the brokers. You can see futures markets trade nearly 24 hours a day, 6 days a week. And this is Eastern time, so from 6 p.m. Eastern on Sunday to 5 p.m. Friday. That is when the markets are open. Like I said, they do close for about an hour a day, but other than that, they are completely open for you to trade. So now that we're covering timing again, let's go talk about the best times that I personally like to trade futures. We can actually use this trade that the group just took on Friday morning as an example of what times I love to trade. So typically I love to trade CL, which is oil, and I really like to trade about 8 a.m. to 9 a.m. Eastern in the morning before market opens. That's usually my sweet spot. Now, I will say if you can get up at like 5 a.m. Eastern, there's some volume there too, but I'm definitely not getting up that early, at least not yet. So if you're a super early bird, you can definitely have some flexibility there. But you can see I posted this at 8:22 a.m. yesterday, which was Friday. And this is what I was looking for. So I was just looking for a break below our key fib level of 76.68, cross back down, and then I was looking for a target of 76.45, and then we had another one down below as well. So you can see I posted that at 8:22 a.m. and so we were right in here at 8:22. We finally started to make some lower highs, catch some sellers in micro range, which is just a fib strategy I created. We got that cross down, and then boom, we had a huge meltdown. I actually did not take this full move. I ended up scaling out right in here, which was just previous support, but overall great A+ trade. And the market had not even officially quote unquote opened yet. So when I used to trade options, I was having to wait till 9:30 a.m. even, the market opens. I would typically push that to 10 a.m. to allow for some direction to form. So I wasn't getting my trading day started until 10 a.m. where a lot of times I can be done before 9 a.m. Eastern, which is just super, super awesome in my book. I really love being done early with work so I can go about my day. But great A+ trade on CL on oil, and so I thought I'd show you guys that just to talk about timing. Other than the morning session, you can also come back closer to like 9 p.m. Eastern. I've seen some volume there too if you like to trade during the nighttime, and then obviously there's going to be more volume during normal trading hours, so 9:30 a.m. Eastern to 4 p.m. Eastern. Okay, now let's move into number 2 here, which is what broker can you use to trade futures? We touched on that a little bit with Ninja, so we will start with that one. So I personally use Ninja to trade futures. I do not use Thinkorswim to trade futures, not yet at least. One of the main reasons is because they have really, really high margin requirements when it comes to trading futures versus Ninja is more catered to futures traders, and so they can allow clients aggressive $50 intraday margins for micro contracts and only $500 for popular future markets, including the E-mini S&P 500, which is that ES futures contract we just talked about. So that means that you can start day trading futures with as little as $50 for margin or $500 for margin on ES. So there's still very, very small entry levels when it comes to day trading with a small account. You don't need a ton of money. Versus if you were going the Thinkorswim route, you can see they have very high margin requirements, $6,930 here. So you're looking at least $5,000, $6,000 when it comes to ES contracts. This is just from their website on Thinkorswim. Versus NinjaTrader, you can do it for $50 or $500. Now keep in mind, this is a great time to introduce you guys to what it means to trade futures using margin requirements. And this is always a big, big red flag for a lot of traders and why they put off futures trading, or at least it scares them. It's because of the margin trading involved and the leverage involved with futures trading. So if you go to the NinjaTrader website and you type in margin pricing requirements, you should be able to pull this up. It'll give you a list of all the different futures instruments you can trade, and then basically if you look right up here, it says day margin and then initial margin that is required. So there's always more margin required if you are swing trading overnight versus if you're just day trading them, there's lower margin required. And so if we go, this is in alphabetical order, there's ES right here. You can see $500. So if you wanted to day trade this, it's $500. If you want to swing trade, it's $12,320. So you want to be very, very careful holding as a swing trade and making sure that you've got this amount of capital. They will margin call you. So if you, let's say if you just start an account with $500 and you open an ES contract, like one ES contract, the minute that you start to fall below that 500 minimum threshold, they're going to margin call you, which means you either have to put more money in or close that position and then put more money in order to trade it again. Because if you don't have $500, you're not going to be able to trade the ES contract. So that's where something like micros can be much more useful for a $500 account. As you can see right here, this is the micro version. That's $50 for day trading versus $1,232 for swing trading. Now, this $50 right here, you have a lot more flexibility when it comes to, you're not going to get margin called as easily if you do have a $500 account and it's only requiring $50 margin. So just be careful with that. But this basically means you are using margin to trade these futures contracts. And so your broker will margin call you if you start to lose in your position. So that's where it can get risky, is if you are too over leveraged, let's say in a personally funded account, you open up, a couple contracts because you're just not used to how they move. Next thing you know, you've blown, let's say like $3,000 out of a $5,000 account. That is what I've seen horror story wise on people who just jumped into futures without being aware of how they work, how leverage works. And so they got burnt very quickly. So I do want to highlight, I want to make this very clear. Futures trading can be very dangerous. If you are jumping in, trying to trade them oversized, and you don't understand first how they move, how the leverage works, and how you can trade regular contracts versus the micros. So this is where it's very, very important. You day trade them with fake money on a simulator or a paper trader account before you ever throw in real money. So that way you can understand what it looks like for a position to go against you a few ticks or a few points, and understand how quickly that can crush an account. Yes, you can make good money, but you can also lose good money. So just make sure you understand how they move. The best way to do that is to paper trade. So play with fake money, get a feel for how they move, the regular contracts versus micros, and just use 1 to 2 contracts at a time. Do not go in heavy. You definitely do not need to hit maybe a daily goal of $200. You can easily do that in a few minutes. But again, you can also easily lose 200 in a few minutes. So make sure you paper trade first. Overall though, Ninja, I really love that broker and that platform. It is super easy to use. It is honestly so beginner friendly. And that is the main one that I use, but there is another one, but it's kind of funny. Ninja actually bought them out, so it's kind of like the same thing. But Tradivate can connect with TradingView. I know a lot of people in my group who do that, but Tradivate is another one that can allow you to trade futures with small amounts of money. They're very similar on commissions. I have not personally used Tradivate or tried their platform. I went the Ninja route, but these two are the most common ones I have seen people use. We have been over a ton of stuff in a little under 30 minutes here. I tried my best to cram as much as possible when it comes to the basics, the broker, and how to day trade futures with a small account. We've already kind of touched on that. So remember the margin requirements. You can start with as little as $50 for a micro ES contract -MES, or $500 when it comes to the regular ES futures contract, and that's just an example. You can obviously trade other ones, but there will be different commissions involved. So you can do it with a small $1,000 account. However, there's actually a different way that you can get even more creative day trading futures with as little as $30, and it's honestly my favorite way. It's basically how I told all my members I personally started, and I think they should too. And that is using prop firms. So basically you're getting other people to fund your trading journey. The risk is much, much smaller. You're risking like $30 to get access to potentially like 25 grand in capital. You can get 50 grand, 100 grand, but you're risking, literally the only thing you're risking is what you're paying for that evaluation process. And there is a lot that goes into it. So if you guys want a video on my take on prop firms, which ones I have used, and again, how you can start day trading futures with as little as like $30, if not less, then let me know down in the comments, and I'll make sure to do a video next on prop firms and my journey with basically getting funded and using other people's money. Because if we can use other people's money to trade, why not? Why would you use your own money? I think it's such a cool concept. So anyways, that is all for today. I hope this video was helpful. And I do want to highlight that I have an entire 8-week program that is included if you become a member. All of that information is in the description box down below, that master link. It is A to Z, so basic stock trading in the first 4 weeks, but the 5 weeks and beyond are going to be all the advanced stuff, like my entire futures training guide for the group. I did step-by-step processes on how I got into futures trading, the platform I'm using, prop firms I'm using. All of that in full detail is explained in week 5. Options trading, if you're still interested in learning that, I do still have that in the program, but I am only trading futures now in the group. I just want to highlight that. I go over my advanced scalping strategies, day trading strategies, my fib strategies, all of that stuff step by step is included in the 8-week program, and much, much more. I do monthly private lessons, going more in depth on topics like supply and demand, basically how to fish for yourself, and all of my strategies that I have been using and created over the past 8 years of trading. So if you're interested in that, description box down below. And that is a wrap for today. I appreciate you guys so much for watching, and I'll see you next week.